Welcome to Fireside Chat. My name is Sai. If you're new to my channel, I talk about how you can budget, save, and invest money to achieve financial independence. Check out my other videos about how to calculate your financial independence numbers, how much money you should save in your emergency fund, and what low-cost index funds to invest to achieve financial independence. In this video, I'm going to cover how you can retire as a millionaire by maximizing your contribution to traditional or Roth IRA starting with $17 a day. Here's my quick disclaimer. I am not a financial advisor or a tax guy. This channel and its videos are for pure educational and entertainment purposes only. If you watch one of my videos about my strategy to achieve financial independence, contributing to my IRA is listed number 2 on my investment priority list, right after the company 401k contribution up to the employer match. I have been building my budget around the money I have left after I maximize my contribution to 401k and IRA. Having an IRA is extremely important to me because being in my mid-30s, I want to give my money a chance to grow in the next 25 years when I turn 59 and a half. Every 30-year-old would tell you the same thing.
I wish I had started when I was 18.
Not only my investment will continue to grow in compound interest, I want to take advantage of the tax benefits that the IRA provides. Since I started investing into my IRA, my account has grown 34% in total return by dollar cost averaging my contributions. So what is an IRA? It is a tax advantage account that you can use to save and invest for individual retirement. There are many types of IRAs out there, but today we're only going to cover traditional IRA and Roth IRA. Typically, if you open an IRA with a broker, you can buy mutual funds, index funds, ETFs, or stocks. I personally have my IRA with Vanguard, and I own some index funds and ETFs. When I was searching for the right broker to open an IRA, I wanted to find a well-established broker that has index funds or mutual funds with a long track record. I did an extensive research on what I wanted to invest before I opened my IRA. I found Vanguard to be the right choice for me. Let's talk about the similarities and the differences between traditional IRA and Roth IRA. Which one is the right choice for you? It's going to come down to whether you'll be better off paying taxes now or later. Both of them have the same contribution limit of $6,000 for the tax year 2021. So you can contribute to your 2021 IRA from January 1st, 2021 until the tax date in 2022, which is typically on April 15th. If you're 50 and older, you have what is called catch-up contribution and you can contribute to $7,000. If you have a spouse who doesn't work, the spouse who is earning income can contribute for the non-working spouse, and you have to be married and your tax filing status must be married, filing jointly. That means you can both contribute up to $12,000 every year or $14,000 every year if you're both age 50 or older. In a traditional IRA, you make contributions with pre-tax dollars, then you pay your taxes on all profits when you withdraw the money in retirement. You may also be able to claim a deduction on your individual federal income tax return for the amount you contributed to your IRA. But it depends on if you're covered by a retirement plan by your employer and your income exceeds certain levels. Let's say you're a 25-year-old single individual who makes about $40,000 a year in gross income. The IRS will tax you first $9,950 at 10% rate or $995 and tax you the remaining $30,050 at 12% or $3,606. So sum that up, that's a total of $4,601 in federal income tax. If you contribute $6,000 to a traditional IRA, and assuming you're not already contributing to your employment retirement plan, then you can lower your adjusted gross income, or AGI, from $40,000 to $34,000, saving you about $720 in federal taxes. That's a nice tax refund, right? But let's say with a Roth IRA, you pay $720 in taxes on that $6,000 contribution to your Roth IRA instead. Then you can hypothetically grow $6,000 from the age of 25 to 60 with an average 7% return to almost $70,000, which you could withdraw it tax-free. Assuming your income stays the same at $40,000 a year and you decide to pay that $720 difference in the federal income tax for the next 35 years. So that's gonna add up to $25,200 in total taxes for 35 years. With 7% annual growth, you could withdraw $974,000 tax-free. If you decide to leave your money in your traditional IRA instead, and let's assume a tax rate of 25% when you retire at the age of 59 and a half, you could owe Uncle Sam $243,704 in taxes when you decide to withdraw from the account, and the same amount of $974,000 as the Roth IRA. Unlike traditional IRA, you can actually withdraw from Roth IRA under certain circumstances. Because you already paid taxes on the money you contributed to Roth IRA, you can actually withdraw your contributions penalty-free. So for example, if you contributed $6,000 to your Roth IRA and you earn $1,000 in interest, then you can withdraw your $6,000 anytime because you already pay federal income tax on it. However, $1,000 that you earn interest on is where you could pay 10% early penalty, federal and state income taxes if you don't meet the following guidelines. You can withdraw your earnings after age 59 and a half and after owning the account for at least 5 years. So what that means is that if you contribute to a Roth IRA for the first time in early 2021 for the 2020 tax year, then you can start withdrawing on January 1st, 2025. There are exceptions to the 5-year rule. You can avoid paying the 10% penalty, but you can't avoid paying federal and state income taxes without meeting the additional criteria. You can withdraw up to $10,000 of Roth IRA's earnings without paying a 10% penalty to buy your first home. Your earnings withdrawal can also be tax-free if you've had the Roth IRA for at least 5 years. You can even withdraw up to $5,000 in a year after the birth or adoption of your child. If you're a military reservist who is called to active duty post 9/11 for more than 179 days or an indefinite period, then you can make your withdrawal without the penalty. You can check out the IRS website and just Google Roth IRA Withdrawal Rules and see if you qualify for any additional exceptions to the rules. Just remember that anytime you make an early withdrawal from your Roth IRA, there's going to be a negative effect on your compound interest growth. Unlike traditional IRAs, there are no required minimum distributions or RMDs with Roth IRA. With traditional IRA, the RMDs are in place because Uncle Sam wants to get his cut on the taxes when you start withdrawing at the age of 72 and start paying taxes on your distribution. If you think your income will go up when you retire and you're gonna end up in a higher tax bracket, then maybe the Roth IRA is the right choice for you. However, not everyone is eligible to directly contribute to the Roth IRA, and here's why. If you're single, you can make a full contribution to your Roth IRA if you have an adjusted gross income of less than $125,000. You can make a partial contribution if you have an AGI of between $125,000 and $140,000. However, you cannot make any contributions if your AGI is above $140,000 a year. If you're married and filing your taxes jointly, you can make a full contribution to your Roth IRA if you have an AGI of less than $198,000. You can make a partial contribution if you have an AGI of between $197,000 and $208,000. However, you cannot make any Roth contributions if your AGI is above $208,000. If you have a complicated tax situation, make sure you do your own research or maybe talk to a CPA before you make any decisions. There is no income threshold to contribute to traditional IRA. But wait, there is a way around to indirectly contribute to your Roth IRA even if you're a high income earner. Being a high income earner is a good problem to have. For Roth IRA, you just have to take an extra step, and it's called Backdoor IRA. It is a completely legal way to get around the income limits that restrict high earners from contributing to Roth IRAs. First, what I do is I contribute $6,000 to a Vanguard traditional IRA, but I keep it in a money market fund so it doesn't accrue interest. Second, I transfer that $6,000 from the money market fund in traditional IRA to the money market fund in Roth IRA by clicking Convert to Roth IRA. Lastly, inside my Roth IRA, I can purchase stocks, ETFs, index funds, or mutual funds. It is very important that you buy them inside your Roth IRA and not your traditional IRA unless you want to pay taxes. So why is it important to start early? The answer is compound interest. Let's take a look at the Fidelity Investments hypothetical growth of your Roth IRA if you start at the age of 15. Let's say you're investing $3,000 every year for ages 15 to 20, and you start contributing $6,000 for ages 21 and over. You could grow your Roth IRA to $1.1 million with annual rate of return of 7% when you turn 55 years old. If you start at age 25 with the same contribution amount, you'll still be able to grow it to $660,000 when you turn 55 years old. If you start at age 35, then your money grows to almost $300,000 when you turn 55 years old. Remember, this is all tax-free. The sooner you do it, the more money it's gonna grow. I personally invest in VTSAX and VFIAX, which is the S&P 500 index fund. And since I started my Roth IRA account, I'm averaging about 12% in annual return. When I turn 60, I should have anywhere between $1.5 to $2 million in tax-free withdrawal. My plan right now is to continue to invest with dollar cost average. And so what I do is I actually invest every 2 weeks from $6,000, so about $233 every 2 weeks into S&P 500 and the VTSAX. I am going to continue to set aside $6,000 every year, or whatever the max contribution is going to be in the future years. And then I'm going to budget around the money that I have left after I have maxed out my 401k and the Roth IRA. Thank you so much for watching my video. Let me know in the comment section down below what type of IRA you currently invest in. I will post a new fire video every Sunday at 9 a.m. I will see you in the next video. Have a good one.
Thanks for watching. Don't forget to hit the like button and subscribe for more fire videos.